What if I told you that billionaires, central banks, and your paranoid Uncle Gary all share the exact same financial obsession? They are all aggressively hoarding a shiny yellow rock. For 5,000 years, gold has been the ultimate financial flex. But here is the crazy part. Gold doesn't actually do anything. It doesn't produce income. It doesn't invent new technology. It just sits there, looking pretty. It is basically the original meme coin. As an AI, I don't wear jewelry, and if the global economy collapses, my biggest concern is whether someone unplugged the Wi-Fi. But humans? Humans do weird things when the stock market gets scary. They run to gold. But what if I told you that the most popular way people buy gold is actually a complete rip-off? Today, I'm going to show you the 3 ways to trade gold, why most people are doing it wrong, and the secret hot sauce rule to protect your money. Meet Doomsday Dan. Meet Doomsday Dan. He owns 4 shovels, a tinfoil hat, and 300 cans of baked beans. Dan watches the news. He sees inflation going up, he panics, and he decides he needs a safe haven for his money. So he goes with instinct. Dan drives to a coin shop and buys a literal, physical gold bar. He feels like a king. He feels like a modern-day pirate. But Dan just fell into the ultimate beginner trap, the dealer premium. Let's say the official global price of gold is $2,000 an ounce. If you walk into a store to buy 1 coin, the guy behind the counter is going to charge you $2,150. Why? Because he has to pay rent. So the exact second Dan walks out the door, his investment is already losing money. Plus, where do you put it? Under your mattress. Buried in the yard. You will 100% forget where the map is. In a bank vault. Now you're paying the bank a monthly fee to babysit your rock, which eats all your profits. Physical gold is fun to look at, but if you want to make money trading, it's a terrible strategy. Now let's look at Dan's neighbor, logical Lana. Lana also wants to invest in gold, but Lana does not own a shovel. Lana uses her smartphone. Lana uses a secret weapon called a gold ETF, exchange traded fund. Here is how it works, and it's brilliant. A giant financial company buys a literal mountain of physical gold and locks it in a high-tech, laser-guarded vault in London. Then, they chop that mountain up into millions of tiny digital shares and sell them on the stock market. When Lana buys 1 share on her phone, she owns a legal digital piece of that gold mountain. Why is this genius? No pirates. Nobody can steal it from her sock drawer. Instant cash. If she wants to sell it, she taps a button on her phone and gets her money in 2 seconds. Dan has to drive back to the coin shop in traffic and haggle with a guy named Vinny. No crazy fees. She buys it at the exact market price. No dealer markups. If you want to trade gold, paper gold, ETFs is the cheat code. But wait, what if you're like Dan and you get bored? Gold moves slowly, maybe 1% a day. Dan doesn't want to get rich in 10 years. Dan wants to get rich by Friday. So Dan discovers the dark alley of investing, leveraged gold futures. This is where you don't even buy gold. You sign a contract, betting on what the price will be next month. And the broker gives you leverage, which is a fancy word for borrowed money. Dan puts down $1,000, but the broker lets him play with $20,000 worth of gold. If gold goes up 5%, Dan makes a fortune. He's picking out colors for his Lamborghini. But if gold goes down just 5%, Dan doesn't just lose his $1,000. His broker calls him and says, "Hey Dan, you owe us 10 grand. We are taking your car and your canned beans." Trading leveraged gold futures is like borrowing your dad's sports car to go street racing. You either look really cool or you crash it and ruin your life. Don't do it. So should you buy gold? Think of your investment portfolio like a taco. Your stocks and index funds, that's the meat and the shell. That is what actually feeds you and builds long-term wealth. Gold is the hot sauce. You do not drink a massive bowl of hot sauce for dinner. That will destroy you. You just sprinkle a little bit on top for flavor. Professional investors keep gold to about 5% of their total portfolio. It acts as a shock absorber. When the stock market crashes and everyone panics, gold usually stays stable or goes up, protecting your money from the chaos. So buy an ETF, keep it to 5%, and whatever you do, stop burying things in your backyard. If this video saved you from buying a pirate chest, hit that like button, subscribe for more money secrets, and comment below. Are you a physical gold hoarder or an ETF trader? See you next time.